Hi guys, Ben here and welcome to Motivation to Invest. Electric vehicle stocks have been on a rampage, from Tesla and NIO to Workhorse and all the hot new IPOs. Now this may seem like a major hype train and many of you guys are concerned that we're in an EV bubble. So if you're worried about that, be sure to check out my previous video on Are We in an EV Bubble? But in this video I'm going to address a concern which many of you guys have commented about. And that is, there's so many electric vehicle stocks right now, how can we compare and analyze all of them together? So in this video, I'm going to give you guys an eagle-eyed view on the entire EV industry and the most popular EV stocks right now. This video is perfect for everybody from a beginner who wants to understand the entire electric vehicle landscape and all the different players in it, to someone who's experienced in the industry, in addition to any Tesla shareholders out there or anybody who's currently invested into any EV stocks and they want to see who the competitors are. In this video, it will also be great for value investors because Buffett actually invested into an EV stock, and I'll reveal that one a little bit later. But before we dive into this in-depth research which I've done, and I've done a whole comparison table of all the EV stocks, please give this video an early thumbs up. That helps out tremendously with the YouTube AI, which allows me to continue creating more great content like this for you guys. And if you're new around here, why not join the community by hitting that subscribe button and turning that notification bell on. That way you'll get notified when I'm personally investing into great stock picks, such as Wayfair, which this year has gone up by over 1,000%. So guys, I have noticed a real lack of in-depth research on YouTube especially. There's so many people with just opinions on stocks and there's no real research going on. So I've actually poured many hours into doing some in-depth research on the entire EV landscape. So here's the result of all that research. I've compiled it all in a table for you guys. Now this is original table, copyright Motivation to Invest. As you can see here, I've got the EV stock in the first part of the column. I've got the USP, unique selling point, price to sales, trailing 12 months, price to earnings or price to sales forward if I could find that, market cap for the company, the number of deliveries for the company, the earnings notes, and the growth year over year and value price to sales. Now that may sound like a lot of data, but it's just to give you guys an overview of the business. So overall, I'm going to cover 12 stocks. I'm not going to go into immense detail on each of them, but I'm just going to briefly run over all 12 stocks to give you guys an overview of what's going on. So here we are. We'll kick things off. It's an unsurprising stock, Tesla, the mammoth of the EV industry. So the unique selling points of Tesla, it's a technology company, so they don't just do electric vehicles. They do solar roofs, they do Tesla Powerwalls to power your home, and they're even working on a fully autonomous vehicle. So Tesla definitely is the market leader in this industry right now. The company's trading at a trailing price to sales of 19, so that means if you buy the shares today, you're paying 19 times the company's sales. Price to earnings, so the company is profitable right now, which is great compared to most EV companies out there, especially all the new startups. But its price to earnings is still sky high, so there's a forward price to earnings of 147. Market cap, $544 billion. As you know, the stock has ran up massively this year. So over $500 billion is the current market cap of Tesla. It's recently been included into the S&P 500. So all things are going pretty well for Tesla at the moment, which is quite ironic really, because just last year, Elon Musk admitted that the company was very close to going bankrupt. So it's funny how things can turn around in the stock market. Number of deliveries. So Tesla's third quarter deliveries amounted to around 139,000 units. These quarterly deliveries rose by 53% during the third quarter compared to the second quarter of the year. That's incredible growth, guys. Usually, you'd look for growth in revenues, for example. This is obviously deliveries, but you look for around 15 to 20% for a growth stock. These have grown 53% on their deliveries between two quarters, which is incredible growth. And the revenue grew 39% year over year to $8.8 billion. So they tripled their operating income to a record $809 million and boosted deliveries by 44% to almost 140,000, which generated free cash flow of $1.4 billion. This marks fresh highs for the company on both fronts. No, so BYD stands for Build Your Dreams. This is Buffett's EV maker, and he actually invested into this company back in 2009. Many were criticizing Buffett and saying the legendary investor has lost his touch as he missed out on great opportunities such as Tesla. But it's clear to see that Buffett was way ahead of the curve, invested into this mega Chinese EV manufacturer. Now, currently this stock for Buffett is around an 8 to 9 bagger. So Buffett's made approximately 8 to 9 times his money since he made that investment. So he's definitely still got it. To give you a brief overview of the company, because I've done a full video on this company, which you can check out. I've got a full EV playlist, which includes almost all the stocks. So they have an auto company with their autos, they sell hybrids, they sell electric vehicles. They also have an electronics company which makes a variety of products. They have vertical integration, so they aim to make everything in-house, their batteries, etc., which gives the company fantastic margins. They have a range of models from, I believe, around 12 different types of passenger vehicles to commercial vehicles such as buses and even construction vehicles. The hottest thing for this company at the moment is their Blade battery, which allows an 80% charge in 33 minutes. So they've introduced that battery in their new BYD Han range, which is a great looking sedan. So this company is a fantastic company, and it's also trading at a fantastic valuation despite the stock already running up this year. So the trailing 12-month price to sales for the company is just a 3.91. So you're paying just 3.9 times the company's sales for an EV manufacturer. So it's definitely a great value stock, even at these prices. The forward price to earnings is 120. And now that may seem high, but it's still cheaper than Tesla at 147. The company's market cap, now I did search this, and after converting it from Chinese yuan to US dollars, it came out as $74 billion. To me, that seemed quite low. Anyone else has some data on the company, because it's really hard to find reliable data on BYD, then please do comment below. But what I found for the market cap was $74 billion. This was from a conversion. Number of deliveries, around 179,000 in 2019. However, the interesting point is January and August, it sold only 91,000. Now, this was a drop of 49%. Now, you could say some of that was down to the global health crisis, but China is an interesting play because it's got the world's largest population, it's got a growing middle class, and it's got the world's largest EV market. So for a company like BYD to see a 49% dip, that is a worrying sign and may signal some problems for Tesla in the future. So only the electric buses were less affected by the NEV subsidy, which the Chinese government introduced. So the electric buses were able to increase their sales by 79% compared to the previous year. So that is massive growth there. They're averaging around 40,000 deliveries per month from the data I could find. I've actually seen some data which says they're delivering a lot less. Their new car, the BYD Han, had deliveries of 5,612 units in September. Now, this was up 40% from August, so their new model is proving to be extremely popular thanks to its stylish design and Blade battery. So the revenues were $6.65 billion, so slightly less than Tesla, but this was up 41% year over year. This was up 41% year over year compared to Tesla's 39% year over year. However, this company is extremely profitable with net income of $262 million. This was up 118% year over year. Now that is incredibly high. So Berkshire Hathaway, Warren Buffett's investing conglomerate, actually owns, I believe, around 10% of this company. So that is very interesting. It means they've got great access to capital from Buffett should they need to expand their business. On to the next stock. So these are my top three. We've got Tesla, BYD, and NIO. So what's unique about NIO? Well, they've got a stylish, luxurious vehicle. I actually watched quite a few reviews of NIO, and many people were saying it was like driving a Bentley. It was very luxurious inside. It felt very high quality inside the vehicle. So that is a unique selling point for the vehicle. But probably the main unique selling point for NIO is the battery swap technology. So China is known for not having the charging infrastructure of which Tesla put in place in the US, and thus battery swap technology seemed like a great option for many people, as customers will not get range anxiety and worry about where is the next place they can charge their vehicle. They can simply drive into a battery swap station and they'll swap over the battery on the NIO. So that is definitely a unique selling point. I really think Tesla should have introduced something like that, or maybe they will in the future. So another benefit to NIO is the China factor. So because they have this battery swap technology, they are entitled to these Chinese government subsidies. It does seem a little bit like the Chinese government is favoring their Chinese-only companies such as NIO. Now, this would be no surprise at all. If we look at many Western companies that are actually banned in China, from Apple to Amazon to Google, all banned in China. So it does not surprise me that the Chinese government wants to push its Made in China initiative and boost its homegrown products. However, NIO has the worst valuation out of the three with a price to sales of 32.97. So you're paying 32 times the company's sales, trailing 12 months that is. Market cap around $73 billion, so similar to BYD in terms of its market cap. NIO delivered 12,200 vehicles in the third quarter of 2020. Now this was a massive growth of over 154% year over year. So this was faster growth than both Tesla and BYD. However, this company is still raking in a small amount of revenues with just $666 million in the third quarter of 2020. It was a massive growth of 146.4% from the third quarter of 2019 and an increase of 21.7% from the second quarter of 2020. If you look at the valuation, this company NIO has got the same valuation as BYD. BYD is bringing in $6 billion in revenue and NIO is bringing in $600 million. So BYD is bringing in 10 times more revenue, yet they've got the same valuation. Now you tell me if that makes sense. Now, I'll tell you the reason why it's like this, and that is generally due to the growth rate. So the faster growth rate a company has, generally the more excitement behind the stock, the more momentum behind the stock, the more people will invest in the stock. And thus that's why we see this high price to sales ratio of 32.97, which does equal the high valuation for NIO. But this is when I bring you to my final column. So this is real in-depth research here, no Mickey Mouse. So if we look at the fastest growth companies, I've labelled them first, second and third between Tesla, BYD and NIO. Actually, NIO is the fastest growing company so far with a year-over-year increase of 146% in their revenues. But it's also the smallest, so smaller companies find it easier to grow faster. But still, it's the fastest growing company. But also, it's got the worst valuation. So NIO's the fastest growing with the worst valuation, which is usually expected because people want a fast growing company at a great valuation. And that is the dream. That if you find the fastest growing company with a great valuation, that's when you load up the truck. That's what happened with Amazon during the March crash. It was a fast growing company at a great valuation because the stock plummeted. And that's where people made fantastic returns in a safe manner. So BYD is the best value stock. No surprise, even over 10 years later after Buffett's investment, it's still the best value stock. Tesla though, surprising with Tesla. So Tesla's not the worst value stock and it's not the fastest growing stock. Its growth rate is still fantastic. And to be honest with you, its valuation is not too bad compared to these others on this list. It's got price to sales of 19. The only worry I do have with Tesla is because it's got $500 billion valuation. I do think it will find it difficult to grow to get to $1 trillion. I do think it will reach $1 trillion one day, but I do feel like it will take a long time to get to that level. To put things into perspective, Amazon, Google, Apple, they only reached those figures fairly recently, and those companies have been around for years with high margin businesses with minimal capital expenditure required. Google doesn't have to build factories and produce vehicles. Right, so that's my top three. Now let's go into the others in this list. So we've got Xpeng. This is another Chinese manufacturer, so they'll benefit from the China factor, I call it. Great product, revenue growth, plus 342% year over year. So they've got monstrous revenue growth. This is much faster growth than we've even seen from NIO. So that is incredible from Xpeng. Price to sales 35 compared to NIO's 33. So slightly worse valuation than NIO. But the market cap's just $47 billion, so it's definitely got plenty of room to grow. Then we have Li Auto. This works on extended range EV vehicles, so they have a lot of hybrids. They say that their hybrids appeal more to the Chinese market because China does still have this sparse charging infrastructure. They may be right. I do believe that the Chinese manufacturers may know their home market slightly better than, say, some Western manufacturers who come to there. However, the company did miss earnings estimates, so this is one of the slower grower stocks, but the price to sales is actually higher than Xpeng, so I definitely wouldn't personally invest into Li Auto. Market cap is the smallest at $34 billion, so it does have the most potential, but despite missing earnings estimates, I don't feel that justifies the reason for this stock to be trading at a higher valuation than Xpeng or NIO. Remember, I've got videos on all these. I'll link them up. I'll link them in the description below. And I've actually got an entire EV playlist on electric vehicle stocks, so you guys can check out and dive into each one of those and see which could be the greatest investments right now. Because as the great Warren Buffett says, a great company is not always a great investment if it's not at the right price. Just binge watch the EV playlist and that should bring you up to speed with what's going on in the industry and any opportunities which you can jump onto. So now onto the speculative stocks. Now, the ironic thing these days, I do see a lot of froth in the market, a lot of exuberance. And when I do a video on speculative stocks, it's one of my best performing videos. Whereas if I do a video on value stocks, it's one of my worst performing videos. Now that is not a great sign to see. Now that is a worrying sign, so just be careful out there, guys. Now I always get asked by many of you guys, Ben, should I even invest into speculative stocks? So my personal opinion on it is you should have a well diversified, balanced portfolio and then have a small percentage of that. And if you wish to invest with a small percentage of your portfolio, analyze the stock for multiple outcomes. So say, okay, if the stock does really well, I'm going to 5x my money. If it does really bad, I'm going to lose 80% of my money, let's say. But if that stock only makes up 1% of your portfolio, you're only going to lose 1% of your portfolio. So know your own investing goals, your financial goals, and know your own risk tolerance, and then go from there. Speculative stocks, we've got Workhorse, they've got their delivery drone vehicle. Now, the reason there's all this exuberance behind Workhorse is they seem like the most likely candidate for this USPS contract. So if you guys don't know, the USPS, United States Postal Service, their vehicles are so old, they've actually been setting on fire, and they need to replace all of them with electric vehicles. There was a few candidates, but Workhorse does seem the most likely, and that's why we've seen all this exuberance behind the stock. But if they don't win the contract, the stock could crash massively. So it really is on that whole contract situation. I've got a video on Workhorse you can check out, use the search bar on my channel. Price of sales for the company, over 3,000, and that's just based on this exuberance with the contract. Market cap still just $3.36 billion though, so they do have plenty of room to grow. This stock could 10x, or it could drop down by 70%. So yeah, just be aware. Rivian, so this stock's not public yet, but I still thought I'd give it a mention. So these work on stylish electric adventure vehicles. So the main thing we saw from these guys is they had an order of 100,000 Amazon delivery vehicles. So Amazon wants to go green. They want vertical integration. They want to own the warehouses, the delivery vehicles. I believe Bezos also wants a fleet of planes to fly packages for people. So the fact that this company has got an order of 100,000 units is fantastic. Next, we have Lordstown Motors. So this is a very interesting company, recent IPO. These have the world's first all-electric commercial pickup truck. So for those of you guys that don't know, the pickup is the best-selling vehicle in the US. That is the Ford F-150. So they've got a variety of comparisons with that vehicle. It is very stylish, I must admit. Market cap still relatively small, $4.47 billion. So definitely one to dive into a little bit more. Arrival. So this is a new IPO. It's actually a British startup company. The big thing with these guys is they've had this contract from UPS, 10,000 electric delivery vehicles. They also work on electric buses. They plan on using what's called micro factories in order to construct their vehicles in a cost-effective manner. Issue with this company is there's a lot of hype behind it at the moment. Just IPOing, but there is a way of investing into the stock pre-IPO. If you watch my video on Arrival, all their whole business is based upon future projections. Produced and sold any vehicles yet. They've only got sort of concept models. And I do recall an earnings call from Elon Musk, and he did state anybody can produce a concept car or a prototype or a few units. The issue comes with scaling the business. And Elon Musk states manufacturing is probably the hardest barrier to overcome for actually succeeding in the EV industry. So that is my major worry with Arrival. It's still an interesting stock, maybe even an interesting stock to just trade. Be sure to check out the video I've got on the business. These are more speculative stocks, IPOs, alternative stocks. So we've got Charge, which is the market leader in charging infrastructure. So their total addressable market, they say, is anywhere you'll park your EV. Park your EV outside offices, shops, wherever it may be, you could use charge points, infrastructure. So this is a very exciting company at the moment. They have high switching costs. And as the great Peter Lynch says here, companies with recurring revenue are also fantastic. So they don't just install these charging stations, they charge the businesses for software, for services, for maintenance. So it is a fantastic company. Valuation is extremely high. I actually spotted 3 major red flags on the accounting. Check out my video on ChargePoint. I'll leave that in the description below. Plug Power hydrogen fuel cell. I won't go into any more detail on this company. in the description below. Romeo Systems, these are another SPAC or special purpose acquisition company which is recently going public. They work on high density batteries for electric vehicles. The philosophy of investing into this company is basically, when there's a gold rush, why not sell shovels? And we've got all these companies turning to electric vehicles. The market's predicted to grow at around 21% compound annual growth rate per year. You've got legacy auto manufacturers going electric. So what do they all need? Well, they all need batteries. Tesla's manufacturing their own. BYD's manufacturing their own. But what about all these other people? So Romeo Systems is working on battery technology. Very interesting company. I haven't seen any other YouTuber talking about this stock. I was probably the first to actually do an in-depth analysis on it. So please do check that out in the description below. Just binge watch the entire EV playlist. That is my advice. With that being said, I hope you guys enjoyed this video. What do you think of the new setup? I've changed everything around a little bit. Let me know in the comments below. And what do you think of the EV stocks? Which is your favorite right now? Let me know in the comments below. And if you found some value in this video, feel free to give it a big thumbs up. That helps out tremendously with the YouTube AI. And if you're new around here and you still haven't subscribed yet, what are you waiting for? Go ahead, hit that subscribe button, turn that notification bell on if you want more investing tips and exclusive stock market picks, which I'm personally investing into. With that being said, I hope you guys have a fantastic day and I'll see you in my next video. Invest safe.